Good morning, everyone. Thank you for joining us. It's a pleasure to have you with us this morning. My name is Veronica Birch Flores. I'm happy to be the Executive Vice President and Chief Operating Officer for First National Bank of South Miami. It has certainly been a very challenging time since March, what our world has been through, our community, our state, our nation, and indeed the entire world. It started, of course, with this horrible pandemic, the COVID-19, and it's just escalated from there. The impact on all of our businesses and our families and our lifestyle is innumerable, and it's been tragic indeed. The legislators in Washington decided and understood the need to help our small businesses. So on March 27th, they passed the CARES Act, and part of the CARES Act was the PPP program. And with the Payroll Protection Program, the idea was to provide some assistance to the small businesses so that they would be able to keep people employed. That was the whole idea behind the program. The unemployment is at record highs, and it escalated in very quick fashion with 30 million people being put on unemployment in just the last 2 months. So this is tragic for our economy and for our society. So the program was meant to be able to keep the businesses paying people and keeping them employed, even if the businesses couldn't stay open during this pandemic. When they passed this, we all thought that 8 weeks was a pretty long time. We had hoped we would be through the worst of this in 2 weeks, and then it was 30 days. Well, here we are, 2.5 months later after the shutdown, and still suffering indeed. So we were very proud of having 55 of our bank members, our team members, working on the PPP. And in that period, we were able to extend and help 250 businesses and on the first phase and then the second phase. So in total, we've helped about 550 businesses with $80 million in funding. And that translated to about 8,200 jobs saved in our community. So we worked very hard for those weeks in order to bring this assistance to our small business clients. So all of you on today's webinar has received one of those loans. And now your goal is to obtain forgiveness. That is, of course, the ultimate goal, to do what you have to do and spend the money the way it is outlined so that you can get full forgiveness of that loan. So we are here today to provide guidance and provide some information. This, as you all know, has been a very dynamic process. The application process was, and now the forgiveness process. They've already issued 12 interim final rules, so it's very confusing and it's becoming very cumbersome and quite complex. We have our resident technical expert joining us today. He will be facilitating today's program. Some of you have seen Angel already through the PPP application, or perhaps a lot of you have already attended 1 or 2 or 3 of his forgiveness webinars. And things are changing. And last week, what the legislation was passed in the House has made this even more complicated. The application that they released, the 11-page application they released 3 weeks ago, has made it even more complex for all of us. So we are doing what we can to provide information and guidance and comfort through these difficult times. It is becoming more obvious that a lot of our small businesses are going to need to seek the advice of their accountant or their tax advisor to get through this. So it's no surprise, I suppose, that Washington has made it more complicated than it needed to be. But with that, I am going to turn it over to my good friend. He is our Executive Vice President, our Director of Private Client Services, and certainly our most educated executive in the PPP forgiveness. He has read and studied hundreds and hundreds of documents and spent hundreds of hours in the last several weeks to try and understand this, to pass this information on to you. So my friend, Angel Medina, take it from here, sir.
Well, good morning, everyone, and thank you all for joining us this morning. Today's presentation is, as Veronica said, on applying for PPP forgiveness, and our goal is to help you through this process and ensure that you maximize the opportunity for forgiveness under this program. Today actually is the beginning of week number 8. If you were one of the first borrowers to apply and be funded the PPP at First National Bank of South Miami, today actually begins your 8th week of the covered period. So you're almost there and almost ready to apply. Let's begin with, there we go. All right, so today's program is going to be what you can use your monies for, what are the allowable uses, and what are the allowable uses that will be forgivable. There's a small distinction, but an important one nonetheless. How you maximize forgiveness. That's our goal, and we're here to help you try to maximize forgiveness. As Veronica said, we've worked very diligently, a lot of us have, in making sure that we stay abreast of all of the changes that are going on with the PPP, and today we expect to bring you the most current information. As you recall, this process was put together very quickly, and that's why there have been so many interim final rules, so many frequently asked questions that the SBA has posted on their website, etc., because it's been a work in progress. We definitely strive to bring you the most accurate information as general guidelines. We believe that it's very important for you to consult on the individuality of your business and your needs and what's in your best interest with your accountant or your attorney in order to ensure that you're doing what's best for you. So let's look back for a couple of months. What was the intention? The intention of this bill was to keep workers employed. You know, there was a lot of discussion about this being about small business, but it was really about keeping people out of the unemployment lines. It's about ensuring that these individuals would be ready for you when your business was ready to be opened, and also to make people feel better, right? Everyone always feels better when they have a job, when they're getting a paycheck, when they have that stability in their life. And so that was really the intent of the PPP. Let's talk about allowable uses, and I'll begin on the right-hand side with forgivable uses. Payroll, 75% must go to payroll for you to receive forgiveness. And these are gross payroll costs. They're going to include vacation, sick leave, medical, or family leave. It's the group health benefits. It could include a bonus. Now, I'll talk about that a little later on, but certainly as long as it's kept within the $100,000 annualized maximum compensation to any one individual, it could include a bonus for that employee. 25% is for non-payroll costs, and non-payroll costs are limited to mortgage interest, rent, and utilities. And utilities, we're talking about electric, water, gas, internet, phone. There's a transportation component of it, but we still don't know what it really means. We believe that it means the transfer of goods and services to your clients, but there's been no clarity on that. Now, looking at that list, what you can see is that it's virtually identical to the left-hand side, which says allowable uses. Allowable uses includes interest on debt obligations incurred before February 15, 2020. But important to note here is those are allowable, but they're not forgivable. So while you can use the money for that, you can't apply forgiveness for interest on debt obligations that you may be paying through your PPP dollars. And it could also include the refinance of your economic injury disaster loan that you made directly with the SBA as long as it was between January 31st and April 30th. Early on, there were a lot of questions as to what PPP could and couldn't be used for. So we added this, and to clarify, PPP funds may not be used for back wages. And you'll see in my explanation that all of the wages that we talk about using for PPP are forward-looking from the covered period or the alternative covered period forward. But then also, you can't use it to prepay expenses. So you can't prepay payroll, and you can't prepay utilities or mortgage interest or anything like that. So really, it's a very finite time frame where you can use these monies for. And we put in here the caveat that any expense is not shown here, because it is a very targeted, very limited use of funds for the PPP dollars. A word of caution: if you're using or plan to use the Families First Coronavirus Response Act subsidy, you cannot include that subsidy in the PPP dollars as well. There's a condition of duplicate purpose, and you have to choose one or the other. And this is where we think that you would benefit from speaking to your accountant about, whether the FFCRA is better for this particular situation, or the PPP dollars are better for your business. What are payroll costs, do's and don'ts? On the do side, gross salary, wages, commissions, any similar compensation like that. One of the SBA guidances provided that payroll costs will also include any cash compensation that would be like a housing stipend or any kind of allowance, a car allowance, a phone allowance, anything. And what we've stated is anything that would go to your W-2 would be allowable under payroll costs, as differentiated from reimbursable expenses. So let's give you a quick example. If you reimburse your employees based on mileage, that's a reimbursable expense and not part of payroll costs. So you could not use PPP dollars for that. But if you gave your employee a $50 a month allowance through their payroll, that would be considered part of your payroll costs. You may have employees that during this period were on vacation, parental, family, medical, sick leave, etc., and you've paid them. Those are part of payroll costs. Any allowance for the dismissal or separation of an employee, and that occurs, and sometimes businesses will give an employee 2 weeks, 30 days, whatever your policy is, that too is part of payroll costs. The payment of group health insurance, including the premium, that is part of payroll costs. And the payments, the employer contribution of the 401k or any retirement benefit that an employer pays for, that is part of payroll costs. Finally, state or local taxes. So let's clarify what isn't included in payroll costs. Well, if you pay an independent contractor or a subcontracted employee, that would not be part of payroll costs. Independent contractors are to apply individually for their own PPP, and subcontracted employees would apply through the subcontracted agency that you contracted with for that employee. Cash compensation in excess of $100,000. That's the maximum annualized cash compensation for any employee, including the business owner. The employer's share of federal payroll taxes, and as I mentioned earlier, the Family First Coronavirus Response Act provision. So let me take a minute to explain that one. If, for example, you have an employee that you may remember that sometimes early on, an employee would take off for 14 days because they came in contact with someone that was suspected of having COVID-19, and they took off for 2 weeks. You and your accountant have determined that you want to use the provisions under Family First Coronavirus Response Act to credit your payroll taxes and take advantage of that to cover the cost of that employee. That payroll for that period that you're leveraging FFCRA is not qualified under an allowable use or for forgiveness as part of your payroll costs. And finally, workman's compensation insurance is not part of payroll costs. There is a borrower's representation and certification that has gotten a lot of attention, and that's why we've highlighted it as this is serious and under penalty of law. And what are these certifications? Well, for one, it's the uncertainty of the current conditions that made it necessary for you to apply for this loan request. You're going to certify that funds will be or were used to retain workers and maintain payroll or to make mortgage, lease, or utility payments. You're going to affirm that the tax documents that you have provided to either support this loan are identical to those that have already been submitted or will be submitted to the Internal Revenue Service, and that you have not received nor will receive another loan under this program for a duplicative purpose. And the duplicative purpose, for example, in the case of FFCRA, that would be a duplicative purpose. And finally, that all of the documentation that you are providing is true and correct. One of the things that guidance came out on May 12th had to do with, you may recall that there was a number of companies that applied for and received PPP that were public companies, Shake Shack, Ruth Chris Steakhouse, and many, many others, AutoNation. There were others like the Los Angeles Lakers or the Harvard Foundation that also applied and received it. And as a result, they came out with guidance that required the borrower to certify that their business was in need, and that it would be the responsibility of the borrower to assess need at the time of application based on PPP and the CARES Act. What that meant was that your business was harmed as a result of the pandemic, that you didn't have other sources of liquidity to fund the costs during this covered period, and as a result, you had to resort to the PPP funding. Now, that didn't mean that you had to spend your last dollar, but in contrast to these public companies that had ample liquidity, that had sources of lines of credit, etc., you could see the distinction there. And you must certify in good faith that the loan request was necessary. So what happened was you had a lot of small businesses that began to get afraid and not apply for the PPP or ask a lot of questions about giving the money back. And one of the things that they provided, the government, was a safe harbor for loans under $2 million. And any PPP loan less than $2 million was granted a safe harbor. And that deemed, and that meant that the required certification concerning your application in good faith was accepted. Now, does that mean that they're not going to audit you? No, it doesn't mean that, and I'll explain that in a second. It just means, though, that the repercussions would be mitigated by this safe harbor. But then it also gave a second chance for those companies that applied for and received PPP dollars greater than $2 million. And essentially what it says is, we're going to give you a second chance. And if you seek, if we determine that you lacked basis for this application, we being the SBA, because let me be clear, the bank will not be the one determining whether you had a need or not. We're going to rely on your representation that you had a need and process your forgiveness application accordingly. But the SBA will be doing audits, random audits. They've certainly said that for loans over 2 million, they will be auditing, but under 2 million, it's going to be random audit, much like your tax audits, right? But what they've said is that if you do lack the need in their determination, they will seek repayment and may deny loan forgiveness, but they'll give you the opportunity to pay it back. And if you pay it back, then they will not pursue enforcement action nor make a referral to any other agency. Some of the webinars that we've attended and some of the materials that we've read talks about how to evidence need, and that could come in a variety of different ways. The SBA has not provided any guidance on that, but this is some of the recommendations by the experts. Maybe a cash flow analysis, maybe a pro forma income statement that demonstrated projected revenue and profitability with had COVID-19 not impacted your business. So you would show one having impacted your business and then a pro forma with it not having impacted your business to demonstrate that there was a need. And you would quantify your actual losses, evidencing the inability to pay salary and other expenses. Now we'll get into the heart of this, which is applying for forgiveness. The application for forgiveness is 11 pages. It's quite complex, quite frankly, although they have provided some good worksheets and some schedules that as long as you follow them, you should be able to complete the application process. All this was supposed to be very simple, right? Well, at the end of the day, it has not turned out to be as simple as 1, 2, 3. Let's begin with a question of number of employees, and I'll distinguish number of employees from full-time equivalent. These are two terms that you have to understand, because number of employees really is only asked at 2 times. One was at the time of the application, and the second is now at the time of forgiveness. It doesn't really impact much except eligibility. Remember that the whole intent here was to help small businesses, and small businesses were defined as companies with employees under 500 employees, except there were several conditions under which some companies could have more than 500, but as a general rule, it was 500 employees. And when you calculate that, a full-time employee plus a part-time employee, even if that employee worked only 2 hours, equaled 2 employees. And of course, do not include independent contractors nor any subcontracted labor. So you may have heard a lot about the covered period. And the covered period, very simply put, is from the date of funding. You have 56 days or 8 weeks that is considered the covered period. And that is the date of funding. And it's the funding of the first tranche. In some cases, some borrowers with larger loans receive funding in more than one tranche. But for purposes of forgiveness and for purposes of the covered period, the starting date is the first date of that funding of the loan. Now, here's what's good because, for example, in this case, I'm showing you here April 20th as the initial funding date. But let's say that your funding date was Wednesday, April 22nd, and it did not align with your payroll. Well, initially, it was thought that you may have to adjust your payroll in order to align with the program. But the most recent guidance provided with the PPP forgiveness application process allowed for an alternative payroll covered period. What does that mean? Well, let me give you two examples of what that means. The first one, a company that pays weekly. In this case, you can see that the funding date of April 20th was the same, but the payroll period, the next payroll period, and that's an important distinction. It must be the beginning of the very next payroll period. You can't pick another period sometime in the future. Would have been, in this case, Sunday, April 26th. And therefore, the alternative payroll cover period runs from Sunday, April 26th through Saturday, June 20th. That would be day 56, the end of week 8. In another example, the biweekly payroll had the same funding date of April 20th, but the start of the payroll period for that company was May 3rd, and therefore it ran from May 3rd through June 27th. So you can see here that they have provided some good flexibility as far as that's concerned. Now, we've received questions on some employers that have monthly payroll processing. There has been no guidance on that as yet, and I'm not sure that we're going to get guidance on that. So I would suggest that you speak to your accountant and determine what is going to be the best way for you to be able to allow for a monthly payroll. You may have to have a special payroll at the second part of that covered period. So let's talk about Schedule A worksheet. And Schedule A worksheet is really where we encourage you to begin. And the snapshot here is of Table 1. There are 3 tables that you're going to use in order to detail all of your employees. Table 1 is going to essentially be for all employees who have annualized compensation of less than or equal to $100,000. Table 2 is going to be for those that are over $100,000. And although there technically is no Table 3, there is a third table that would be for the owners. So let's show you here that the focus is on those employees which had annualized compensation equal to or less than $100,000, and generally that would be for all pay periods in 2019. And of course, this is for only employees whose principal place of residence is in the United States. It's important to note here that you would not include the owners, but a separate table would be utilized for them. Let me go through this. You would list all the employee names of full-time and part-time employees. The employee identifier, typically in many companies, that's the employee social security number. We strongly recommend that you not use the full social security number, but rather a truncated number such as the last 4 digits of that employee's social security number. Cash compensation, I will explain how to compute that, but essentially that is the cash compensation that that employee received during the covered or alternative covered period. Average FTE is what is the full-time equivalent. For a full-time employee, the SBA has established a standard of 40 hours. And so any employee that you consider, whether they're working 35 hours or 37 and a half or 40 hours, and you consider them a full-time employee, that would be equal to 1.0. Part-time, I'll show you how to compute that in a moment, but you're going to have two options. You're either going to have the option to refer to that employee as half of an employee or a half a FTE, or you compute the hours that they work in order to come up with what the fractional full-time equivalent is for that employee. And then the salary and hourly wage reduction, there's quite a bit of math that's going to go into that, and there's a spreadsheet in about 2 slides from here that's going to show you how to compute it. But that essentially is for those employees whom you have reduced their salary by more than 25% during the covered period. But if you brought them back to their normal salary or their pre-COVID salary by June 30th, then there would be no reduction for that. But if you haven't, then there's a reduction in the forgiveness amount in this section that you're going to have to complete. So I talked about cash compensation. Cash compensation is that gross pay during that covered or alternative covered period of the employee's salary, wages, tips, commissions, any gross pay like that, plus any allowance for auto, club membership, gas, phone, anything that is W-2 related would that you paid during this time period would be included in cash compensation. And of course, we don't want to duplicate anything that we are also utilizing FFCRA for. It's very important that there's a number here that you can't exceed. No employee will exceed 15,385. And what's the magic of that number? That's simply 8 weeks of covered or alternative covered period divided by 52 weeks times $100,000. So see, that's how they cap the maximum compensation at $100,000. And of course, in this table 1, I again remind you, do not include the owners. Table 2. Here, I started mentioning that this is where you calculate the full-time equivalent. So you have 2 options here. And wherever you have an option, I would strongly recommend that you do the math on both options. You want to see which one is going to be most beneficial to you in order to maximize forgiveness. So don't go the easy route, which is option 2, which essentially says, well, a part-timer is 0.5 and a full-timer is 1.0, unless that's the one that benefits you the most. In this case, what we see is that there is a computation for the other option, or option 1. A full-time employee will always be 1.0. But in this case, we've looked at a part-time employee, and how we compute that is like this. You take the hours that they've worked during each week, and then you divide it by 40 and round to the nearest 10. So in this example, we have an employee that worked 10 hours week 1, 8 hours week 2, 14 week 3, and so on, for a total of 93 hours. Well, 93 divided by 8 weeks is 11.63, and the average numbers per week is 11.6, and to determine the average FTE, you divide by 40. So your answer here is 0.29, rounded to the nearest tenth, 0.3. So in this case, a full-time and a part-time employee would add up to 1.3. If you used option 2, you'd have 1.5. And you're going to see that that will make a difference. Now, whichever option you use, you have to stick with it consistently. So if you use this type, option 1 during the base period, you're going to have to use option 1 during the covered period as well. You can't pick and choose. Box 3 is the penalty, let's call it, for having reduced someone's salary by more than 25%. And this one looks at the salary during the annualized salary during the base period versus the annualized salary during the covered period. So I'm showing you here 2 examples. Employee number 1, during the covered period, you decided to reduce their salary and you're paying them on an annualized basis $50,000 a year. During the base period, which is the first quarter of 2020, you were paying them $65,000 a year. And so you divide the covered by the base period to come up with 77%. And because 77% is greater than 75%, the answer to box 3 for that employee is 0. But if we go to employee 2, you reduce their salary to $60,000 versus $90,000 during the base period, which means 67%. So that employee received a salary cut during the covered period of more than 75%. Well, in that case, now there's 2 tests. One test is to see if by June 30th, you return that employee's salary back to the $90,000 level, or better said, the $67,500 level, because remember that you can reduce their salary as much as 25%. So in this case here, since you didn't bring them back to the at least 67,000, but rather you kept them at 60,000, you will receive a reduction in your forgiveness of $1,153.85. And I'm not going to get into the specifics of the math there, because if you follow the instructions on the spreadsheet itself, it's pretty easy to see how you arrive at that number. But what you are going to have to do, take a look here, is calculate what the average annualized salary was during different periods. In this case, we were calculating the period of February 15, 2020 to April 26, 2020. This is the same, but for an hourly employee. And as you can see here in the area of salaried hourly employees, what we showed is each payroll during that covered period, the number of hours worked, the hours, and what the hourly rate was for that particular period. And this helps you come up with the average hours worked and the average hourly rate that was worked. But you have the same type of test, and you have the same safe harbor, which is June 30th. Again, as long as by June 30th, their hourly rate was not reduced by more than 25%, you won't have a penalty. But if it was, then, example, in this case, that employee would carry a reduction in forgiveness of $39.60. Doesn't sound like much, but they start to add up. And besides, we want you to get 100% forgiveness. There are some exceptions that you're going to be able to look to. Well, what's the importance of exceptions? Okay, let me take a second to explain the process. You got the loan, You went through the covered or alternative covered period, and now you're computing forgiveness. You've put together all of your costs, and you've arrived at a forgiveness, maximum forgiveness dollars. The first test that's going to occur is a 75%. Does payroll represent 75% or greater of the forgiveness amount? If yes, then there's a second test. And that second test is you're going to compare the number of full-time equivalents that you had during the covered period against the full-time equivalent during the base period. In this case, the base period, the SBA is giving you two options for the base period. The first option is February 15th, 2019 through June 30th, 2019. And the second option is January 1st, 2020 through February 29th, 2020. Remember that I mentioned a couple of times already, whenever the SBA is giving you options to look at the numbers, we encourage you to look at both. So in this case, what's the importance of the FTE exceptions? It's in order to reduce the number of FTEs during your base period, if you offered a position to that employee to return to work and that employee chose not to, that could be an exempted employee. But what that requires is that both the offer and the rejection are done in writing, and also that you notify the unemployment office that that individual rejected that offer. So you see, this has all been in answer to a lot of the questions that the unemployment is paying our employees that we're asking to come back to work more than what they would get if they come back. Well, this mitigates that considerably, because once that unemployment office has noticed that the employee rejected your offer, chances are they will no longer be eligible for unemployment compensation. If they were fired for a cause, if there was a voluntary resignation, or if they voluntarily requested and received a reduction in hours. And everything here requires documentation. So be sure to retain all the letters, correspondence that you've had with that employee to demonstrate any of these activities. Table 2 is exactly the same as Table 1, except it's for those employees that in 2019 earned annualized more than $100,000. And what I like to point out here is, for example, annualized is an important concept, because, for example, if you hired an employee in September of 2019, so you paid them September, October, November, December, 4 months at $10,000 a month, that employee would have earned $40,000. But when you annualize it, it annualizes to $120,000. So that employee would not be part of Table 1, but would be part of Table 2. Here again, FTE equivalent, full-time 1, part-time either the computation or a half, and the maximum compensation of any employee in this table is going to be $15,385, and you would not include the owner, but the owner is going to either be a separate table, or if in the case of a single individual owner, it's going to be a straight number onto line 9 of the application itself. There is a safe harbor for the FTE reductions. What is the FTE reduction? I was mentioning earlier that the first test for forgiveness was 75% percent towards payroll cost. The next test is, did I retain the same number of FTE equivalents during the covered period and pay them that I had during that base period? And so when you look at that, you're going to have a safe harbor that as long as you've hired them back by June 30th, then you're not going to have any reduction in the forgiveness. But for example, if you only had 8 employees during the covered period versus your base period of 10, you would only be eligible for 80% of the forgiveness application. Now let's talk about documentation for a minute, and we'll talk about payroll documentation and FTE documentation. And in the area of payroll documentation, it'll apply to the covered or the alternative covered period. You're going to be using either bank account statements or your third-party payroll service provider statements. Now, those of you that are using a payroll provider service, we understand that companies such as ADP are going to make this process very simple for you, because they understand that there's a lot of math and a lot of numbers that the SBA is requiring, and a lot of support materials, but they have already developed the type of reporting that you're going to be able to go into their system, download those reports, and you're not going to have to do the math yourself. So what about the tax forms? Well, the tax forms must overlap all the periods that you are covering here. And you would provide the 941, you'd provide the unemployment insurance filings and things like that. How you're going to show payment is the payment receipts, right? The canceled checks. You're going to show account statements for health insurance or retirement plans. And that's all of the documentation that you're going to need for payroll. So you see, quite a bit of homework is going to be required, and documentation for the PPP forgiveness. In the area of full-time equivalent documentation, you're going to evidence for the periods February 15, 2019 through June 30th, 2019, January 1st, 2020 to February 29th, 2020, and of course, the covered and alternative covered period. In the area of non-payroll documentation, you can utilize the lender amortization schedule together with receipts or canceled checks for the payments made. Now, remember, this is only mortgage interest. So if in your regular mortgage payment, you also reduce principal because there's amortization, or you escrow for taxes and insurance, only the interest portion is covered here. Now, if you're not going to use the amortization schedule and cancel checks, you can use the lender account statement detailing the interest paid for the periods February 20th through 1 month after the end of the covered or alternative covered period. That's very important because that'll show you all of the payments that you actually made during that period. If you're going to apply for forgiveness for rent, you're going to have to show the current lease, because remember, leases must be documented and they must have been in effect before February 15th, 2020, and the canceled checks that demonstrate that you've made that payment. In the area of utility, you'll show your invoices from February 2020 through the end of the covered or the alternative covered period, and the canceled checks that go with them. So all of this documentation must be maintained for a period of 6 years after the payment in full of the loan. So this really means that from the time of your application, actually from the time of your funding, the SBA is going to have as many as 8 years in which they can come back and ask you to provide all of the supporting materials, any worksheets, etc. One advice that we're giving our clients where it's a little gray whether they had a need or not. I mean, there are some clear examples that are going to be very easy to document. If you have a restaurant and you were shuttered and maybe you weren't even doing the takeout business, that's going to be very easy to demonstrate that you had a need. But there are some situations that are a little bit more gray, and we have a tendency as humans to sometimes, forget some of our negative experiences and move on in life. And so what I'm recommending is that you keep notes and you keep them with these records of the reasons that you felt that you had a need to apply for this loan and how this loan helped you get through this time period, because that may be something that comes up in an audit if an audit occurs. We thank you for the time you've given us today. We hope that you've found value in how we've presented this and the information that we've been providing you. And on that, I'll turn it back over to Veronica, who will conclude the session with questions. Thank you.
Thank you, Angel. Excellent work. So much information. So we do have a few questions from the group. Anyone who does have any questions, please go ahead and post them in the Q&A, and Angel will do his best to provide his information. So Angel, I think you touched on this a bit already. Recent articles stated the new House bill increased non-payment from 25 to 40% in terms of the non-payroll expenses.
Okay, yes, but that, let's go back to civics class, right? So how a bill becomes a law, you introduce the bill, it has to go to both houses. We have approval by the House of Representatives, and that one extends maturity for up to 5 years on new loans. It increases the covered period from 8 to 24 weeks. Then there's a number of things, including the 60-40 combination of payroll and non-payroll expenses. But that's only in the House. We still have the Senate, and then it still has to go to the President. As recent as yesterday, we heard from our industry that while the Senate is still in discussion about this, nothing has come forth. And while they were going to put it forth for unanimous consent, in other words, not even have their own bill, but rather just take the House bill and approve it unanimously, there's so much disagreement within the Senate itself that they don't feel that that's going to fly. So our advice to you is, if you've gotten your PPP, if you've used the monies and have been able to use all the monies, if your money fits, if your uses fits the bucket, apply for it as early as possible. Be done with it, put it behind you, and let's move on.
Yeah, so along the same lines, I heard there will be an extension, Martha writes, of forgiveness from 8 weeks to 16 weeks. Has this been approved? It's the same exact answer. It's part of what the House has approved, still has not gone to the Senate for debate. So it's got a bit of a way to go. But as Angel said yesterday in our industry newsletters, it seems to be a lot of dissension. So not sure it's going to be passed as the House has done. So one of our bank controllers, company controllers, is asking, with regards to the PPP Schedule A worksheet, does this need to be submitted with the application, or can they generate their own Excel worksheet?
No, they can generate their own Excel worksheet. The submittal with the application is only a few documents, and the tables are not part of it. The tables were provided just to help.
Okay. I've seen legislation. So this is the same thing about the percentages. So Andrew, it's the same thing. We're kind of in limbo, but as Angel said, if you have enough with the current payroll and your current expenses, then we would advise to go ahead and start your application. Will this webinar audio, video, and slides be made available after completion? Yes, Andrew, you will be able to find it on our website. We will put today's recording up there, as well as the slide deck that Angel has gone through. Already on our website is the SBA application and some FAQs and other information there regarding PPP. During the application process, I believe we calculated the number of employees by total number, not FTEs. What is the ramification of that now?
During the application process is irrelevant because that's only for qualification. If you were under 500 employees, it doesn't matter. It doesn't matter. You qualify, right? You were eligible. So forget that. And it's FTE is when you are looking for the application for forgiveness, and that's where you have those tests as to how many FTEs did I have during the covered period versus the base periods that the SBA asks you to look against.
Okay. Is interest on a line of credit for a business forgivable under this program?
It's not forgivable. It is allowable, but not forgivable.
Right. Okay, so good morning. Could you please expand a little bit? Oh gosh, Angel, every single session we get this. What are considered transportation items that can be considered as forgivable?
I don't know. We don't know. There hasn't been guidance on that.
Well, there are some things that are clear.
On transportation?
Clearly allowed. Right, if they are using a delivery truck, then that is allowed. Where it gets gray is owners' cars, gas for employees.
So you're right. We have provided guidance that transporting materials, goods, services to your clients is what is thought to be transportation costs, but guidance has not been provided, but we think that those would be acceptable transportation costs.
Okay. I was funded on a Thursday and payroll was issued the same day before we actually received notification of receipt. Can I start the payroll the following week, or will I need to start on that original Thursday?
No, you can start it. That's the difference between the covered period and the alternative covered period. You can start it on the first day of the next payroll period following the funding date.
Okay. Angel, you did such a thorough job that we only had 7 questions today. So I know you're incorporating a lot of things into this program, so you have less and less questions. Mm-hmm. So our last comment here is thank you all both for your help. We really appreciate it. So thank you all, everyone. We have finished in 59 minutes. We appreciate your time. We know it's precious, especially in these very trying times. We wish you a good day. I wish you God's blessings for us all to get through this horrific time and get back to whatever normal is. And please stay healthy, stay safe, and we look forward to seeing you in person perhaps one day. Thanks and have a great day. Thank you, Angel.
Thank you.